recording pause. All right. So I don't know where okay. So I want to be clear how this is, how the challenge is really not meant to be like a trading school, a school. It's meant to help to challenge you more so than anything else on staying disciplined, coming up with a plan or a method, a way of trading to be consistently profitable. It's all about being consistent. It's not about making $1 million overnight. It's about being consistently profitable. So that's the purpose of it. And then I did it in the community format to make it a little bit easier. So, because sometimes when you have that community, you have accountability, plus you have other people to throw, ideas off of. Sometimes when you're trading by yourself, you're just, not as confident, not sure. So that's the reason I did it in the community setting as well. And then also, of course, I wanted to give you guys access to some of the tools that we use at KXC that helps us to stay consistently profitable. Give you guys a chance to fill that out and so on and so forth. So in saying that, I want to kind of just get a feel for what is needed for me in this beginner's class. Because sometimes, after you've traded a while, you kind of forget what it was like to be a beginner. So I don't really know what you guys need. So if that's why I make it really specific. If everybody's good, I can go. Okay, Yvonne, go ahead.
So good morning. Um, I had a question because in class earlier today you said that if it's too big of a lot size, then it won't let you in. I was curious, how do you know it's too big of a lot size for your account?
Okay. So I don't really teach about lot size, but I'm gonna send you some videos.
Okay,
But
I wasn't
because
sure what's like the
yeah,
biggest,
no, 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 it's fine. The reason why is because it's kind of, it's not just your lot size is determined by your margin, your broker, your margin, and the asset you're trading, and it's an actual calculation. So that's why I didn't want, yeah, I'm kind of tired. Kind of tired, so I didn't want to get into math right now. But
Yeah.
there are a lot of calculators, and so basically, it's dependent on like when you selected your broker, they have various leverage amounts, and so there's like 1 to 500, 1 to 50, 1 to 200. I think Plexi on their micro accounts go all the way up to 1 to 2,000. So there are various amounts of leverage. And basically that's what leverage is. It's kind of like borrowed money. Think of it. They allow you to put in a bigger trade than the dollar size that you give. So it's kind of like using house money, so to
Mm-hmm.
speak. And then, so what happens, the reason why the trade isn't placed is because it does what's called a margin call. So what it is, if you put too big of a lot size in, then it calls the margin. It says you don't have enough money. But it's just that the reason the trade doesn't show up is because it's happening so fast. Like it just doesn't even create the trade because it knows ahead of time that you don't have enough based on your margin and your account size to open a trade. So that's why it happens in that manner. So, but there are margin calculators. And again, one of the things that's why I said use a demo account and use an account that you think you would be able to invest. So if you feel like you're going to be able to invest $500 at the end of this, then use a $500 account and just keep trying that lot size until it fits. Now, remember that, in the daily bread, we know like we may have $100,000 worth of bills and we want to get them all paid with the daily bread. But we know that's not even reasonable, right? Because if you only have a $500 account, you're not going to get a $10,000 trade out of it. You know what I'm saying? So you have to be mindful of that as well. So a $500 account think of it like this. A $500 account with a 500 to 1 is basically for every dollar of that 500, they give you $500, right?
Mhm.
So if you multiply, I'm gonna just break it down in an easy way. If you multiply that 500 by 500, right? Because that's if your leverage is 500 or whatever your leverage is. So
Mhm.
500 times 500 is 25,000, right?
Mhm.
Oh, yeah, I put plus. Okay, I'm like, wait a minute, so I'm serious. Yeah, 25,000. So if you do that, if you look at it in that way, I'm 250,000. I'm sorry, 250,000. And remember that lots are in 10,000 units. So
Mhm.
when you trade, you're trading 10,000 units, right?
Mhm.
So the reason I said, I just automatically divide that by 10,000 to make it easy because it's just a big number. So that's 25, right?
Mhm.
So basically, how you have to look at that is, and then if you're trading one lot size, it's basically divided by 10 again because it's $10. So divided by 10. So that means you have about 2.5 on a $500 account with a $500 500 to 1 at 2.5. If you put in a 2.5 lot size, you are going to use up 100% of your margin, right? So you'll be at so you know how when we trade it'll say, what your margin level is, your
Mhm.
margin percent. Well,
Yeah.
100, when you drop below 100, it turns red because you're getting, everybody has a different margin call. Every broker has a different margin call. But once you drop below 100, you are at risk of a margin call. So that being said, if you have a $500 account, you never want to put in a 2.5.
Mhm.
So what I suggest, the way we trade, is that your total lot size amount to, so if you have multiple trades, the total amount of all of those trades that you put in at one given time should be anywhere, you should be at 200 to 300. For new people, I recommend 300%. So that means that if you have a 2.5 and I want you to end up with 300% of margin, then that means you divide it by 3, of course, So 2.5 about, yeah, you want it 300, yeah, because you want 3 times that much. So you divide 2.5 by 3. So basically what that means, that amounts to 0.67 approximately. So
Mhm.
you want to, if you're going to trade 3 daily bread trades in the morning, you want to divide that 0.67 by 3, right?
Right.
And that gives you about a 0.2,
Okay.
0.22. So I just figured out a lot size for a $500 account, basically with a $500 margin. I mean, leverage. That's how you do it. If you have a $5,000 account, you're going to do it the same way for the daily bread trade. I
Mhm.
am a person that, for the most part, because of the way I trade, until I start going into profit, I am a one position trader. What that means is I do one position and I usually go in aggressive with that one position because I have aggressive stops because I have the trade man. So, and I have a tool that's going to manage my trade so that if I start to go into loss, it's going to protect my profit. So
Mhm.
I only need one position. But if I'm nervous about the way the market is, really, I'm not going to get in it because I don't trade every day, except for the daily bread trade. But um, if I'm nervous about it, then I'll go with a lower position and then stack later. So,
Okay.
but so for me, I never really got into all of the different lot sizes and all of that because I knew my lot size. Like,
Mhm.
because yeah. And that's another thing. You may practice with 0.22 and you see like, oh, I don't like that amount. Go down. I don't like the risk that it gives me when it
Mhm.
goes out, when it goes against me. The risk is too high for me. So then you change that. So you might go to a 0.1. So that would just mean that instead of you only doing one daily bread trade to get to your goal, you may have to do multiple
Okay.
and then as your account grows, you're able to do you're able to do, you know, maybe only one trade because your account is bigger. So now you have enough room to do only one trade.
Okay.
Did that help?
It did help. It did. Also, what really helped this morning was when you worked backwards, where you had us find the amount of like 500 and then see what it said down there, and then
And then go back and put it in as
divide it by
fixed.
3.
Yeah.
Yeah, so
Yeah.
that's
Because the calculation that I just did, it does for you. And
hmm
that's what I like about it. Is like it'll do the calculation. So I usually will do the calculation and then I'll take it from dynamic and change it to fixed. Once I get that value, I'll change it to fit. I'll divide it by 3 and change it to a fixed amount.
okay.
Just
Okay.
easy. It's just how I like to do it.
Okay. Perfect. And then your pips were dependent on the pair and how many candles it does, right?
So basically, I don't know if you know what about average true range. So there is I don't Nina, is there a tool to find the average true range? Like is there do you know?
There
I've
is
been
one.
trying
There's
to
one.
find one,
It is
because
one.
even Joy's been trying to find. She has one. Well, she has one in MT4 or 5, but she hasn't been able to find a really good one that she likes on TradingView. So I don't have any recommendations.
Okay. So there's a tool that'll give you. So basically I know on I don't know if it's baby pips or what is it? I can't think of it. FX the one is FX is the one that allows you to have the trade journal, right?
My
I think
FX book.
My FX book, yes. My FX book has a on when you they have a lot of tools and resources there, and they have a place where you can go and it gives you the volatility of each pair.
Okay.
Let me just check really quick. My FX book is what I think it they have a lot of tools. If you go to myfxbook.com,
They're the
they
ones that
have,
do the news, right?
I'm sorry,
They're the ones that do the news.
no, Forex Factory does the news. I don't know if they're associated with them or not. I'm not sure. But I know that they have like calculators and all of that stuff too. But one of the things that I believe that they have is a tool that allows you that'll tell you the volatility of each pair.
Chuck just sent it to me.
Chuck sent it to you?
Yeah.
Okay, good. All right. There you go. There you go. See, I'm telling you, you got the best hand. You got the best hand over here. Okay. They also have position calculators and stuff, but to me, for a new person, they're a little bit, they make it a little bit hard, but there you go. So,
I put it in the
but
chat.
okay, tell him we need the ATR, he gave you the AD, the average daily range. I want the average true range.
Do you hear that?
No, I can't hear him.
He'll send it.
Okay, thank you.
Thank you. But that's
Okay,
helpful. Thank you. I appreciate
yeah,
that. Those are
all
actually
right.
both of my questions because you had mentioned the volatile ones are the best ones to practice on and do the daily bread throughout the day and stuff. So
And I mean, you can use the daily bread for it's just the point of it is not to be on the charts all day. That's the point. So if you do something that's volatile, it's going to move and hit your targets and you're done. That's the point of it. So,
yeah. Thank you.
all righty. All right. Anybody else have any questions that they have about
And
anything that, go ahead, in the chat
YouTube,
or something?
YouTube has some information on the average true range. So if you want to go in and listen to those people.
Thank you so much.
Mhm.
And how we use the average true range, it's just a tool to find out, like maybe you don't want to trade an indice because it is more expensive to trade an indice, of course, because let me share my screen. Because what the number that we're seeing moving up and down is basically like the cost of that pair, right? So for instance, if we look at if we're looking at NAS basically right now that it's at 19,311. So when I was talking about that dollar value, that 500 times 500, that 200, so it's basically like you have to have enough coverage for that 19,000. That's what determines your lot size. Like they look at the cost at that point in time, and then they say, okay, how many of these can she put in, can I divide into her number, right? So that's why it depends on what pair you're trading, what your lot size is going to be. So, and I didn't really bring that up because it's all different based on all the pairs, right? But if you go to, like, I think I pulled up Euro JPY earlier today, and I believe their rate was like 150. Yeah, they're like 150. Think of it like, I mean, their currency value is different from ours, but we're just gonna make everything like $1. So theirs is like $157 and some change. So when looking at your account, a lot of that's why Forex made it affordable to enter the market, because you can trade the NASDAQ. That's a stock. That's stock. So you can, you could trade the NASDAQ like you trade stocks, but you can't trade currency like you trade the stocks in the stock market unless they have a contract, like through futures or options. So the Forex market made it affordable because it allowed people to trade Forex without knowing futures and all of that stuff, without being in, before it did. That's why. And so you could get in with a small account because it only costs, $1.57. Think of it like per stock. Like, it only costs $157 per stock versus NASDAQ, which is 19,000, or SPX, which is 5,000, or you see what I'm saying? So that's how Forex is more affordable. So like, for instance, if you used the, Euro JPY on the daily bread, you could put in a bigger lot size. If you use, anywhere, you could put in a bigger lot size because the value of it is less than NASDAQ. So you want to use, that's why I brought up the fact that, like, for instance, when we're trading and we're looking at the volatility of the market for NASDAQ, we're looking at when the New York Stock Exchange opens. But there's a time when, Euro JPY is governed by the Japanese yen. So there's a time when the Asian market opens where they would probably have some movement in their market. Same thing with GBP, the London market. There's a time when the London market moves when they first open, and they would have some volatility in their pairs. So I'm telling you that because everybody has different schedules as well. And so you may not be able to trade at 6:30 in the morning when New York Stock Exchange opens, but you may be able to trade during London session. So then you would want to get familiar with GBP pairs and which pair was the most volatile in that group. And you could do the same exact thing that we're doing with NAS. You could do that with a GBP pair or a JPY pair for the Asian market, et cetera, et cetera. So, hopefully that explains it. It's a lot to it. And with this not being an actual education class, I feel like I'm leaving you guys kind of, with partial information, and I don't like that. But all right. So the next thing I want to go through, and we go through this in the, oh, I'm sorry, Antoinette was able to log on. I thought I saw her log on. Or did I? No, I did it. Okay.
Yes, ma'am. I'm in.
Oh, you did? Okay.
Yeah,
All
yeah.
right. Okay.
Thank you.
So what did you need help with?
Okay, I gotta go back to work in a minute, so it's gonna be right.
Okay. Okay.
I,
Really?
I'll be looking at the videos, but I want to make sure I know how to set my trade. I don't really understand how. Like I was going on the daily I was going over the daily bread video, and I want to make sure I know how to set the tray. I know how, I saw how you did it, but I'm not for sure how do I click the button
What time
to,
zone are you on? What time
I'm in
zone are you?
Detroit. Now I'm in Detroit. It's like 11:20. It's 11:26.
Nina,
So
what
I was,
time zone are you on?
I'm central.
Okay. Do you think you can set up a Zoom with her to help her? Because you're
Yeah.
at work, right now,
yeah,
Antoinette.
yeah, I gotta go. Yeah, I gotta go back to work.
I know you got to go
Okay.
back to work. So,
Yes, I am.
can you reach out to Nina in the hub?
Yes, I will. Okay.
Okay,
All
I'll
right.
let you go
Thank
back
you.
to work. All
Okay.
righty.
Bye bye.
She'll
Bye bye.
help
Thank
you.
you. Okay.
Bye.
Thank
No
you. Bye
problem.
bye.
She at work. Okay, I understand. All right. Thank you, Nina. You're the only one here. That's why I'm volunteering you. Sorry. All right. So, I think everybody, I'm gonna go through the Quantum FX Pro, and I'm gonna take this sniper off because this isn't part of what we do. I'm gonna go through the Quantum FX Pro, and it really doesn't matter what pair, so I can keep this one here. So I want to go through and just so you know what is available and what it does. I'm not sure, what level. Maybe I see Charles is on here. Janet, I know you're pretty versed in this. Donna knows how to trade pretty good. So it's Yvonne and Charles that I'm not sure about. So I'm just going to go through the tool because both of you guys came a little bit later. So I want to go through the tool for you guys, and so you guys will get the full experience of the tool and what it could do for you. Of course, there is the guide and a video. There's a guide in the KXE Hub. It's a written guide, and then there is the video on the YouTube channel. So, but I'm just going to go through it really quickly. I'm going to take everything off first of the screen so you can see what it's like without it. All right. So, if you load it onto your screen without clicking any strategies or any other tools inside of it, this is what it looks like. It'll have, what time frame am I on? I'm going to go on the 15-minute time frame. So what it will have is a price line. This gold line is what I call a price line. And then it'll have generally a resistance and a support area that goes from your swing high to swing low to swing high. It'll have that's where your support areas will be, support and resistance areas. Now, if it has broken either the support or resistance, it may be above or below price at that time. This time frame has not broken it, so price is in between the resistance and support areas. All right. And if I'm too basic, just let me know. If you guys got this, just let me know. I just don't know what you guys know and what you don't. So this just alone by itself can help a beginner to understand what price is doing. Because what it does is it kind of lets you know this price line is kind of, it's going with price. That's why I call it a price line. And so it is telling you, where price is in relation to it being bullish or bearish. If it is above the price line, it is generally bullish. If it is below, it is bearish, right? The other thing is it's helping people to understand where is your high and your low, and if that has been broken. So, if you're in a trend, where the next level has to break in order to continue the trend. If it's just going in between both sections, it is ranging. And ranging is a time, it ranges most of the time, but it's a time when you want to be very careful about getting into a trade when it's ranging, because you don't know what it's going to do. When it's trending, you know what it's going to do. It's going to create higher highs and higher lows. So that's how that works. Or if it's in a, or lower highs or lower lows. So you can better plan your trade that way. So that's what the tool looks like. It also has this confluence pillars bar that you can move anywhere around the screen, in any of the corners or the center. And it just tells you it's made up of six different indicators. And it's just when all of those are confluent with each other, if it's bearish or bullish, it's just letting you know that it's bearish or bullish, and for that time frame. So that's what the confluence pillars does. It just gives you kind of a quick view of what that time frame is doing. So the next thing is when you go to the menu, you click this settings button, you go to the menu, you'll see a lot of selections that you can choose. And for me, you hear me calling it like the Swiss Army knife. And the reason I call it that because it has a toolbox of, it's like your personal toolbox of trading tools. For people that are new, sometimes they have problems understanding where the high and low is in order to see if it's trending or not. So I put a pivot high and low on there. So it's not going to give you every high and low, but it'll give you the when it says pivot, it's like think of it like the important highs and lows. So it's going to give you the pivot highs and lows for that time frame, right? So you see these little H's and L's. So that way you can determine, you hear me a lot of time talking about a violation, it violated the trend. You can then see really easily if it violated the trend because, you know, if you're in an uptrend, you should be making higher highs and higher lows. If you're in a downtrend, you should be making lower highs and lower lows. So you can see it really easily without having to figure out. So that is the purpose of the that tool. The next thing which you generally always see on my chart is the support and resistance levels. And these are levels where price tends to go and have resistance, support and resistance at. The blue lines and the white or teal colored lines, shall I say, rather than blue. The teal colored lines and the white line are ultimate support and resistance areas. And then this is the major pivot point in the middle. Like think of it in the middle. Now you also have some smaller teal colored lines. Those are also support and resistance areas, but they're less important. I mean, they're less strong, I guess to say. They're not as strong as this ultimate here. You also have an imminent bearish reversal and an imminent bullish reversal. That's just saying that if price gets through here, it usually will either break and continue and go up. If it doesn't break and shift the pivot points, then it's going to generally reverse. So you have that there as well. If you notice, just looking at this chart, you can see that price is really resisted at pretty much all of the levels, not here, but for the most part at the levels where you see the lines. And so if you're in a trade and you're scalping or you want to trade and you don't know where to put your TP, a good place to put the TP would be one of the next areas that you may find resistance. So it works to help you with that. All right. The next thing I'm going to talk about is our strategy signal settings. We have two strategies that are incorporated into this. And the first one is your notification. And so if you're it's a trend strategy and then our kingdom strategy. The trend strategy, of course, is to be used when you're in a trend. If you're ranging, don't use the trend strategy for a signal, right? Number one, that's most important. If you're ranging, do not depend on it because you're not gonna get a good signal. So you need to know that whatever time frame you're trading on, that time frame is in a trend, whether that's a bullish trend or a bearish trend. So that is our trend signal. So, and this is, as you can see, this time frame is ranging. And you see, you see how the signals are so close. You have you had a green one, now you have a red one. Now they're close because it's ranging. So versus, let me find if they're, okay, versus an area on here where you're in a trend right here and you notice you got your signal here and it stayed down until you got some resistance, but then you continued down. Then you got your uptrend, you had time to make money, right? Before you got another signal, which wasn't to here. So versus this, back and forth. where you're getting back and forth because it's meant to be used when you're in a trend. Okay. So what you will see on here on the chart, I'll just show you. You'll have a blue, a teal colored, and a white colored square above the price bar. That is your alert that, hey, start looking at your chart. There may be a trade coming, a potential entry coming up, right? So you'll get this one first most times. So like here, you got this signal first, and then you got the actual entry signal, right? Now, this is a short time frame, which is why the move is short, because you would enter at the close, which means you would enter here, right? Which would give you a very short trade. But that's because you're at the end of a trend, right? I say because it's a trend strategy, it would be smart to use it along with the current trend cloud or even the major trend cloud. Because if you don't know when it's in a trend, the trend cloud will help you to know when it's in a trend. So as you can see here, when this is, if you're looking at, doing a short-term trade, you would look at the current trend, price trend. If you're looking at a longer trend, you want to pay attention to the major trend. So you can see when this major cloud cross, when all of these cross,
Sorry,
okay,
what was the first one you said before? You said major cloud.
this is the price cloud, it's I think it's called current trend cloud. All right. So if you're doing a shorter term trade, pay attention to this one will turn first before this one will. So this will turn before this one. So it'll give you, notice first. And then like you see here, this one started turning and then it doesn't turn green to over here, right? This one doesn't. This one turns, gray, and eventually you can't see the blue, but it's right here. And then, but say for instance, you were here and you got this signal, right? If you got this let me just do something really quickly. I'm going to do a replay to here. So let's wait for it to catch up. And I'm going to take off the trend cloud for now and show you what I mean. So let's say you got this signal right here, right? And you can't tell if you're in a trend just looking at the chart, right? It looks like to me it's ranging, like, oh, I'm at possibly the bottom of a trend, right? But right here, you can't really tell if you're in a trend. You just got this signal and then you got this signal, right? So you're like, oh, should I get in here, right? Without the trend cloud, you don't really know. You don't really know because you only have one, it was low, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. But you're here. You don't know what this is. Are you going up? Because this is telling you to sell. But you're like, hey, this is going up. Why am I selling here? Right? Why are you giving me a sell signal when right now what I see is a upward trend based on if I did this. Right? That's an upward trend. Right? So why am I getting a sell signal? Should I get in? I don't think I should get in this because I think it's going to go up based on this trend. But if you put on the trend cloud, either, you can either put on the current or the major. I'm going to take this one off first. So if you put on the trend cloud, what you can see here is that it was down, then it went up, came back down, went up. Now, oh, I got this signal. I'm probably at it just crossed. You see the white there? I may be at the beginning of a trend, a downward trend, right? Based on that. Let me look and see what the major trend is doing. Do I have green or red? So if you put the major cloud on, now you can see that, oh, look, this was just a pullback. It was already in a downtrend This was just kind of sideways, but even the major trend is coming back. Yeah, I can take that trade. So you go ahead and you take a short position to possibly the next place of resistance, which is here, right? And then you put your stop right above this candle. And that's a 1 to about 3.64. So if we let it move, you hit your TP. You never went, you went, this is where you entered. You can see you went very little into the drawdown. I don't know if you guys can see that, but it's because, oh yeah, you can see it now. Oh, right here, you went into a little bit of drawdown on this candle. But do you see how using the trend cloud with the trend signal helps you to determine, is this a good signal I should get in on or not?
Yeah.
So that's the purpose of it.
Okay. That's very
And you
helpful.
can also see at the time, the confluence pillars were bright red. Okay. That's how that works. All right. So I just showed you that the kingdom strategy works the same, but you just, you don't, it's not based on a trend. It's a more conservative trade. So I recommend that people do that for like a longer term trade, and use the trade manager to manage that. So, because it's a very conservative trade. So if you try to use it on a lower time frame, you're not going to catch that many pips. Okay. Any questions about what I've shown you guys so far?
No, this is awesome. That cloud
right.
goes so deliciously with how I trade. Yes.
Does it?
I mean, it's just like cake and icing and sprinkles and ice cream and more. Yes.
Awesome. I'm glad. All right. So the next thing I'm going to bring up is, we kind of already talked about the cloud, so I'm not going to bring up the cloud again. You guys see the cloud every day. So we have the cloud. Some people may not like the cloud. So what I did is I also provided the trailing trend settings. And one of the things in one of the classes Jay had asked about was like multi-time frame analysis, comparing, what's happening on this chart with the other chart, like with a higher time frame chart. So this is the tool that you could use to do that, because there is a current time frame trailing trend line and then a higher time frame. And the way that they work, if you hover over this information button, you can see what time, depending on what time frame you're on, which higher time frame is actually being mapped on that time frame. So for instance, on the 1 minute, you're seeing the 5 minute higher time frame. On the 3 or 5 minute, you're seeing the 15 minute, and so on and so forth. So you just need to hover over and get familiar with it, to know what, and you will know, because you know what time frame you trade on. And it's based on, standards of multi-time frame analysis. If people are looking at the 1, 2, or 3 hour, they're, the 1 hour, they usually want to look at the 4 hour higher time frame. If people are looking at the 4 hour, they usually want to look at the daily. If people are on the daily, they want to look at the weekly, et cetera, et cetera, et cetera. So that's how it's done. That's how it's coded. So as you can see, let me take this stuff off my chart. So as you can see, there is a thin red and green line, right? And then there's a thicker blue and red line, right? So the thicker lines are denoting the higher time frame. The thinner lines is your current time frame trailing trend. And all it does is it moves with the trend. So, it moves with price, not the trend. It moves with price. So it trails price and will let you know, like for instance here, it was going with price, it was red. And if it's going down, it's going to be, if it's bearish, it's going to be above. If it's bullish, it's going to be below. So as it was, current price was going down, it it showed you the trailing trend line above it. Then once it got here, you see that the green line started to come as it went bullish. So it's a good way to let you know, if you're not paying attention, that you're losing whatever trend you were previously in. The other point is the area where you'll notice that, like, once the candle breaks the area where that line is, that's when that next candle, it'll start going in the opposite. So like here, it was going up. Price broke, this candle broke where this line is, and that's when you start to see the red line coming down. Okay, same thing happens with this line. So what that with the higher time frame. But what that helps you to do is, because this line is always moving with price, it lets you know where price has to break to violate your current trend based on price, or shall I say your price direction, right? Because it's not a trend unless it's making higher highs and higher lows. So it's really good if you're actively in a trade and you may be monitoring a trade that you're actively in. It helps you to know, like, oh, this is turning. You got a good visual of it turning. And you can see it in comparison to the higher time frame without having to switch back and forth between charts. So that's what the trailing trend lines do. Okay, let's see. There is also something called price action trend lines. And a lot of times when we are, oh, I have it in replay mode. Let me take it out of replay mode. A lot of times when we are trading, we are having to draw trend lines, right? We would have to, if we wanted to know this trend, we would have to go here, get a trend line. If you draw, I don't know if people draw from wick or body, but you would have to draw that trend line, right? As you can see, this trend line is because it's based on a lower trend line, but it's basically, especially when you get to this, if I did this, right, you can see that, like, it goes right to the center of where this is. It lines up perfectly with the center. Like, so same thing would happen if I put a trend line here. Oh, that's not even a trend. I'm tripping. I got to go back further. But if I was to put a trend line here, you would see it hits in the center. So this is just using a higher point. That's why it's not exactly lined up with this one. I'm on a lower point, same thing here. But this gives you an idea of, like, if I'm going back and forth, it's ranging, which this is eventually got to break. And it usually breaks near the point when price gets to this center here, right? So this is the same as not as your trend lines, but you don't have to draw them. They move with price. Again, remember I said I was being a little lazy and I didn't want to draw boxes and lines and all of that stuff. So that is the reason why I created this. I did not want to constantly draw trend lines. So this does it for you, and it moves with price. So it lets you know when price is in between two trend lines like this, it is ranging. You could just turn this on. If you want to know what's going on the time frame, you turn this on, and if its price is between, it is ranging. If price is above the blue line, then it is trying to go into a bullish trend. If the blue line is vertical, it is in a bullish trend. If price is below this red line, it is trying to go bearish. If price if the red line is vertical, it is in a bearish trend. So you can easily, without having to draw a trend line, know exactly what's happening as far as the trend for that time frame just by clicking on this and looking at the chart. Again, meant to make your life easy when you're trading, right? All right. Next thing we're going to go to, we're almost there. All right. So we have a price action channel. And as you know, a price action channel is based on price action, but it basically creates a channel, which is basically two trend lines, just so you know, that encapsulate the high and low of the current move. So it encapsulates the current move. And if you can notice, as it gets to the end of this channel, it reverses and starts to come back down. So the reason that the channel is a good thing is as you get to going closer to the edge, price is moving closer to the edge, you can prepare yourself for a potential move down that it's going to reverse at that point. Not necessarily reverse the trend, but reverse the direction, because this moves with price. So as you go up, it would widen if it's going to continue going up. If it doesn't widen, that pretty much tells you that it might be going down. Again, I got tired of drawing channels. So it also has some advanced techniques in there with fib. It has fibs inside of the price action channel, and you can also extend this price action channel. So that's so that you can look at the future possibility of where price is going, right? So you see it extended the price line. So you can see the path, if it continues to go up, where it could possibly go. That's what that is. Okay, the next thing is double top, double bottoms. And this is based off of a strategy that I teach, but it's basically a double top, double bottom strategy. You'll hear me mention that a double top may be forming, et cetera, during class. It's, again, it draws the double tops for you. But what's important is as the price is coming down, because this double bottom is a previous resistance area, it basically, because that's all double tops, double bottoms is where price previously had resistance or support. So, and then there's some techniques that'll tell you where price may go if it makes a double top or a double bottom. So that's what that is. And it just draws the lines for me, and it gives you the little symbols, the DB, DT. Again, so I don't have to draw, but again, the other part is you get to see where those potential double tops, double bottoms are. Also, it helps you, you know how I'll say sometimes look to the left and see where there was previous support. This will give you that as well. Previous support or resistance. You can just look for the blue lines, right? There you go.
And that falls in line with yesterday when you were saying, you're showing the trend and you said, well, we have to disregard this because the double bottom just happened. Like it was the same level. So we have to start it here instead.
So when yes and no. So
Yeah.
when yes, because exactly, because the double bottom basically means you have equal lows. So if you have equal lows, then you're not making higher highs and higher lows, or lower lows and you're not making higher lows or lower lows. So if you have a double bottom, that means you made equal lows. So yes, exactly. So it's not trending, right? It's not trending if it's not making higher lows or lower lows. It's not trending. So yep, exactly it. And then you can just change the style of it. Like if it's too many lines that look the same, I made it where you can do dotted, dashed, or dotted, dashed, and then you can change the size of the text so that it stands out for you better. So that's the double top, double bottom. The last thing is the histogram, and the histogram, although it's not a MACD, because it has more things coded in. It has like an Elliott wave oscillation coded into it and stochastic oscillator coded into it. So it's not, it looks like a MACD, but it behaves like a MACD, but it's more than a MACD. Okay, and so basically you heard me saying, like, I like to wait until it, it changes and it takes it back to let me know that the pullback or the retracement is over. That's mostly what I use it for, but I also use it to look at momentum, to look at, are we continuing with that same momentum or is it lessening? So I know how aggressive I could be with a trade. Because if we're continuing to get momentum, I could be more aggressive with the trade, maybe add a lot, something like that. Or I can exit if we're losing momentum.
Got it.
Okay. So that is, and you can change the size of this. And that is it. That is everything that this tool does. It is meant, again, not to trade for you, but to assist you with making a decision about your trades and to make it a lot easier for you to make those decisions by having, some people, I used to have a fib in it, but I took it out, but an auto fib because I was doing too much. But anyway, so
That's
it was
actually
too many
one
tools.
the
So
fib.
yeah,
That's not that.
I'm sorry.
It's not the fib levels option you have, that it's something different that you used to have? Because you
No,
said,
the fib levels is no. It would literally find every time it would literally it would automatically do the high to low and it would have a fib here.
okay.
So it would instead of me having to come here and draw this fib, it would already have it on the screen. You could choose to already have, and as price move, the fib would change. So it would flip like on a down, it would be coming this way, but on the upward move, it would flip and be the reverse. So it would do that. I'm telling you, I didn't want to do nothing.
I
I
appreciate
didn't want to draw the fib. So, but I took that off because it was too many numbers hanging around.
Yeah. No, thank you. Because I did read the PDF, printed it out, highlighted it like each one once I went through, and then I watched your video, but you actually explaining it. I think this is going to be a really helpful video to go back to for me.
Okay, good. All right. Anybody have, because that's it. That's pretty much that's the whole that's all of the wonderful Quantum FX Pro. So it's a lot to it, but it once you get to know it and get to see how it moves, especially like when trading your pair, your asset, like it's gonna be a wealth of knowledge for you. And just being able to click a button and do all of that, because sometimes people, you can't draw the line all the way, or you don't really know where previous support was, you think it's right here, but you're not sure. Like it does all of that for you. So, and it's based on a calculation. So you don't have to worry about it being wrong. The computer's doing it. So again, just wanted you guys to see in the beginner. So when, as I'm pulling out the tool and using it in class, you guys have a feel for what I'm doing.
Yeah, I think it's great for back testing for me, like to start using it to learn, like, would this have been a good place to enter the market? And
Yep.
so I like that a lot.
Yep. And you know that TradingView allows you to do that, to actually enter the market in replay mode now. You know what I mean? So like, say for instance, you wanted to, I'm gonna put on an entry, right? Put on the trend strategy, right? So say for instance, you wanted to, let me see where it gets some entries. Okay. So say for instance, you wanted to go and test out what it would have. I'm waiting for it. Let me move back one more. Oh no. All right. So, all right. So say you want to go and test out this move, right? Like you want to test out the trend strategy and you're like, okay, I just got a bar, it closed, I got the signal. Just say just pretend like the trend cloud is on here and you think you're going to take a buy. You could literally click buy and go through the candles and one by one and say, okay, I would stay in the candle. I would stay in the candle as it closes. I would stay in the candle. I would still stay in. Oh, I'm at a resistance zone. You might not have stayed in. You know what I'm saying? Like you can literally click and it'll tell you as you see the profit,
Yeah.
and it's based on this account size. You also can go ahead and put in a take profit and a stop loss.
Wow.
So it now has that, and you can go through it and say, you know, is it going to hit my take profit?
Mhm.
Or, yep, see,
Wow.
it hit, so you made it. And so it'll tell you down here, you made 633 yen.
Oh, wow. And that's just
So
on
yeah,
just
that's
the,
regular trading view. It now has that. I
oh,
believe it's regular trading view. I don't know. Is it,
let me do it and see right now.
Nina? I believe it is though. Do you
Are
know,
you saying
Nina?
like with the paid or the unpaid?
Yeah. Do you know?
I don't know. It's kind of tricky because when I first signed up, I mean, some people had the replay capabilities and I didn't, so
Okay.
I can't answer that.
I'm
Okay.
using the free one just because Chuck is on the paid one right now. And it doesn't look like I
lets
can do the replay on free.
Oh, okay.
It makes me have to go
Okay.
basic, but it's okay. It's at least
Okay.
good to know that I can jump on.
Okay. Jump on it when Chuck's off of it. And then there you go. So
That's awesome.
yeah, I just wanted to show you that. So like you said, you want to back test, you can go in and do it with it, and it adds up everything for you. So you don't have to journal it like we used to do in the old days.
Mhm.
Like, yeah. So,
He said it's available on daily candles on basic.
oh, okay. There you
Let's
go.
go higher. See, I don't know how he's listening and teaching at the same time.
That's
Okay.
for you. Multitask. All right.
All right, there we go.
Okay. So if does anybody have any questions or anything about anything I did today?
I don't have a
No.
question, but I always appreciate and value when you go through this because I tend to pick up something each and every time. And then it also helps just really drive it in when we're trading in the mornings and evenings. And I just get more and more familiar with it. It's a lot to the tool. And so just hearing the breakdown and then with you trading with it, it just helps. So thank you.
You're welcome. Thank you. Thank you. Okay, well, I'm gonna head out and I'll see you guys later on tonight. Practice with the tools and happy trading. You guys have a great day, okay?
May
Thank you.
success be with us. Thank you. Take care.
Thank you. You too. Bye-bye.